MIA's bylaws on professional ethics, conduct and practice. There are 5 fundamental principles and conceptual framework: integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. Firstly, the principle of integrity imposes an obligation on all auditors to be straightforward and honest in all professional and business relationships. Auditors must satisfy the purpose of the audit, and information required must be complete, accurate and reliable to draw conclusions. Next, the principle of objectivity. The auditor should not compromise their professional or business judgment because of bias and conflict of interest. Auditors must follow the international standards on auditing. This ensures that the financial reporting and audit done objectively. The reports made should be more reliable and relevant. Furthermore, auditors must perform services with due care, competence, and diligence. This is to ensure that clients or employers receive competent professional service and to act diligently in accordance with applicable technical and professional standards while providing professional services. Moreover, the auditors must respect the confidentiality of information obtained while carrying out service and should not disclose any information to the third parties without consent from his client. Lastly, the auditors must carry out their work with ethical and professional standards relevant to audit work assigned. In marketing and promoting themselves and their work, auditors should not perform unprofessional work conduct that brings discredit to the profession. Threats and safeguards. There are 5 threats to compliance with fundamental principles: self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threats. Self-interest threats occur when an auditor is likely to benefit from a financial interest or other interest. The threat that a financial or other interest will influence a professional accountant's judgment or behavior. Next, self-review threat occurs when judgment of previous audit engagement needs to be re-evaluated in reaching conclusions on the current audit engagement. After that, advocacy threats occur when professional accountants promote a client's or employing organization's position to the point that the accountant objectivity is compromised. For example, the auditor resolves disputes with creditors on behalf of audit client. Familiarity threat is the threat that due to a close relationship with an audit client, its directors, officers or employees, a firm or a member of the audit team becomes too sympathetic to their client's interests. For example, the auditor's spouse is an officer of the company. Last but not least, intimidation threat occurs when a member of the audit team may be deterred from acting objectively and exercising professional skepticism by threats, actual or perceived, from the directors, officers or employees of an audit client. For example, threat of replacement over a qualified audit report. Safeguards should be applied, when necessary, to eliminate the threats or reduce them to an acceptable level. Safeguards fall into 2 broad categories. Firstly, created by the profession, legislation, and regulation. Secondly, safeguard within work environment. Safeguards created by the profession, legislation or regulation. This may include, for example, the requirements of professional standards, corporate governance regulations and education and training of auditors. Next, safeguards within the audit firms or in the work environment. For example, policies and procedures to prohibit individuals who are not members of an engagement team from inappropriately influencing the outcome of the engagement. Section 290 Independence. What is independence in Section 290? The auditor should be independent of mind and independence in appearance. Independence in mind is the state of mind that permits the expression without being affected by influences, while the independence in appearance is linked to the Section 263 of Companies Act 2016. Section B200 Method of Practice. A member in public practice is not allowed to practice as a chartered accountant or licensed accountant other than in his or her own name, in the name or names of his or her partner or partners, being chartered accountants, or in the name of a firm existing at the time of the coming into operation of the Act or formed thereafter, provided that the partners in Malaysia are eligible to be registered as chartered accountants. Section 330 Audit Fees, Commission, and Referral. Audit fees charged that should be a fair reflection of value of the work performed for the client, taking into account of, firstly, skill and knowledge required for the type of work involved. Secondly, the level of training and experience of the persons necessarily. And the last one is the time necessarily spent by each person engaged in the works. Commission. A member should not pay a commission to obtain a client, nor should not receive any commission from a client to prevent unethical behavior by auditor. Lastly, referral. Member of public practice should not provide any other profession services to the referring member's client without informing the referring member if a member in public practice receives an assignment by referral from another member in public practice. International Standards of Auditing, ISAs. The International Standards on Auditing, ISAs, are auditing guidelines developed by the IASB. While the ISAs have been in existence for much longer, the newest, clarified version of the standards was released in 2009. This clarification gave the standards more relevance and clearer guidance on some of the motivations behind auditing. Malaysian-approved Standards of Auditing is issued by MIA. Objective: to set a standard to enable the auditor to express an opinion. Function: to help the auditor in fulfilling their skills of responsibilities in auditing. That's all from us. Thank you.